Hi, this is Mark with ValueCharts.com. We have seen some wild swings here recently in gold, but what really has been working better than anything else has been the combination of trend lines and value. Let me tell you exactly what I'm talking about here. Back in the early part of the year, we saw a very aggressive sell-off from right around the 1700 level all the way down to right around the 1630 level in gold. Just a very sharp sell-off here. We've been kind of ratcheting our way back up here over the ensuing weeks after that, and then we experienced another pretty strong sell-off. Now, if you notice here with the secondary sell-off here, there was a nice trend line. It's pretty close to being nice, and with a break of that, we saw prices come all the way back down to a low here. Now, once we've established that low here, what's interesting is we've had a nice rally off of that low, and then we've had another sell-off that's come right back down to this trend line. Now, we were talking yesterday about this being a good opportunity in our trading room and with Signal Feed as well to establish long positions in gold. The reason why is we're moderately undervalued here, according to the value bars indicator, and that's communicated by these lower yellow bar segments here. We can see those across about a number of bars. In fact, I'm going to increase my bar spacing a little bit to make this easier to see. But we see that we've had a number of those in a row here. And then we see that with the unemployment report this morning, we get a really nice boost with gold higher. Now, the way to play this type of trade, ideally, is to put your stop right below the trend line for a little bit longer term investment or trade here. And then you can take advantage of the upswing if you get that. So you have the support level of the trend line here. You have the fact that you're moderately undervalued. And then the other nice thing we're seeing here too is that if you go look at the MQ momentum indicator, we also see that the indicator line, which is the blue line, is higher here. So it's higher here than it was previously, which means that we're seeing a strengthening in the momentum picture for the buyers. Okay, so and then the other thing that's interesting here as a final note, if you look at the sell-off here, we just had several really yesterday on the 31st. Look down here at what we call the MQ market strength indicator. And that is, if you notice that gold tends to kind of rally or sell off consistently over time around the same levels. Now, sometimes it can go way beyond that historically, but recently it looks like it had one other point where it was right around the $25 an ounce level. It went slightly above that over here, and then it came right back to right around that area. So $25 to call it $30 here. It looks like that value's 30, yeah. So that's where it's been selling off for an 8-bar period. In this case, we're looking at 240-minute bars. That's all we have for gold right now. That's the analysis. I'm going to show early next week an analysis of the weekly activity that's happening right now. And I think we're seeing a picture that could suggest gold might go back up and test the upper part of a flag pattern that it's in. That's all we have right now. I'm actually long gold as we speak, expecting to potentially go back up and test the upper boundary of the flag pattern. And then if we break that, we should be off to the races to the upside. That's all we have. Thanks for watching.